In bear market, usually there are two type of investors. Investor number one who sell everything and they just run from market, and there are investor number two who buy great quality companies. Warren Buffett has said, "When others are fearful, you have to be greedy." So in today's video, we'll discuss three stocks which I am personally buying. We'll go deep dive. The reason behind I am buying, the financials, the corporate news, the charts, and everything will go in detail. So without wasting any time, let's jump into my screen. So the first company on our today list is Rain Industry. In fact, I have taken the time out of my day and I have made a presentation for you all. I have done so much effort. So at least give a like and subscribe to my channel. And definitely you will see more and more videos like this where I'll go deep dive in companies and I will make quality videos like these. So the first company in my today list, and I think this company has a huge upside potential, and the company name is Rain Industries. Now, the Rain Industry, the current market price is 121, 52-week range is 99 low, and 52-week high is 176. Now the market cap is 4,000 crores and price to book ratio is just 0.53 times, and net debt slash by EBITDA is 3.21 times. Now let's jump into the stock overview. Now before we invest in any company, I highly recommend everyone to first you have to know about the company. You have to know in and out about the company. If you don't know about the company, what does company do, what is the business model of the company, what is the management, how the business earns, every single rupee a business earn, you should know how the company is earning. So in this video we'll discuss everything about the company. First, it's very important you to understand about the company. So the Rain Industry is one of the largest producer of calcium petroleum coke, which is known as CPC, and coal tar pitch, CTP, and the world's largest distiller of coal tar. Founded in 1974, headquartered in Hyderabad, India, and the company operates across 8 countries and 3 continents with diversified revenue across carbon, advanced material, and cement segments. Now, the company earns through three products. First is carbon, second is advanced materials, and third is cement. From carbon, the company's revenue is 72%. From advanced materials, it's 18%. And from cement, it is 10%. So if a company is earning 100 rupees, 72 rupees is coming from carbon, 18% is coming from advanced materials, and 10% is coming from cements. So that I'm sure that you find something helpful here. And from carbon, the CPC, GPC, CTP, raw material from aluminum, steel, graphite, and thyroid direct oxide industries. From advanced, 18% where the revenue comes from is from engineered product, chemical intermediates, resin used in coating, construction, and petrochemicals, and the cement. Two integrated plants they have in Telangana, Andhra Pradesh for MNTPA capacity, OPC, and PPC grades. Fantastic. Now the company is founded in 1974. 8 countries they are in currently, 3 continents. Revenue in financial year 2025, their revenue was 16,945 crores. They have 8,000 plus employees. This company is. Now, second, now the business model and how Rain makes money, right? Raw material, oil, refinery by product processing, then high value output like CPC, CTP, like coal tar, we have discussed, and end material like aluminum, steel, paints, and constructions. So carbon from 72%, advanced from 18%, and cement from 10%. So these are the thing that the company do. You can take a screenshot and you can read it later. We'll just go through main points. You can take a screenshot or pause these things and read these things. Second, let's discuss into the stock prices. Now we have understood what does Rain Industry do, how many employees are there, when it was founded, what is the market cap, what are the business model, how the company earns, even 1 rupee from where that money coming from. We know everything. Now we'll jump into the stock prices. Now current market price as of April 2026 is 121, 52-week low is 99, high is 176, all-time high is 475. So from 475 it has now corrected to 121. Market cap is around 4,000 crores and price to book ratio is just 0.53 times. Now, annual returns, if you take, in 2018 it has given negative 64% return, 2019 it has given 27% negative return, but in 2020 the company has done a turnaround. It has given 29% return, 21 67% return. But from there the market has been flat. Now, if you look at the price journey of this company, now in 2018 the all-time high was 475. Peak aluminum boom super cycle profit, because of which the stock hit all-time high in January 18. In 2019, the stock fell to 60 to 80 rupees. Now, the reason behind this is down cycle pet coke import restrictions. So, the government imposed restrictions on pet coke imports. So, the stock fell to 60 to 80 rupees. Now, in 2021, post COVID recovery, the stock price was surged to 200 rupees. In 2023, 100 to 160 losses from high input costs. So, high input costs, because of which the stock price fell close to 50% from 200. Now, in 2016 and 2021, April 2026, it is now at 121. Why? Because look at the price to book value ratio. It is just 0.53 times. They have a book value of 221 and the stock price is just 121. So just 50% cheaper than the book value. Now, the valuation is so mouth watering that you cannot miss Rain Industries from your portfolio. So this is the reason why I have added the Rain Industries. Now, in financials, if you look, the company was doing fairly good. From revenue, if you look at 2023, it was 17, this full year, calendar year 2023 CY, revenue was 17,000 crores. Now 2024 it was 15,000, 2025 it is 16,000. Now quarter 4 in 2025 it was for 4,200 crores. Now if you look at net profit was negative 1,024, 564, but this year they have done a turnaround and this year they have a closed in positive 13.5%. So some change is coming in this company's Rain Industries. That's why this is my first pick I have chose. So Rain Industries definitely looks a turnaround in this company. Now quarterly, if you look, now you can take a screenshot, but I'll go through quarterly. Quarter 3 2025 revenue was 4,300, EBITDA 648. Now EBITDA percentage was 15.1% and net profit 13.5% they have reported. So in the past, if you look at the quarter 2024 quarter, 2025 quarter, it was negative 161 crores, 121 crore, 161, 120. So it was playing the range of 100 and 200 crores. But later in quarter 2 2025, if you look, they have done a turnaround. And from past 3 quarters, they have been posting positive numbers. That is why it's a very good. Now, even if you look at EBITDA, right? Now, if you look at EBITDA, it was 326, 490, 292, 390, 434. But in quarter 2, they have jumped to 600 crores. So very good for this company, 600, and they are maintaining this 6 to 500 range. So they are above 400 range and they are maintaining 6 to 500 crore range of EBITDA. So very good, 600, 648 and 578 crores. Next, investment thesis. Now pay attention. Now pay attention very closely. Now investment thesis. Why to buy and why not to buy? See, not every company is like a titan, right? Just buy it. Rakesh Jhunjhunwala sir has invested 3 rupees. Now it is at 3,000, right? Not every company will become a very good, right? Some companies has flaws. Some company is very good. With time, the company do the improvement and so do the stock prices. Now, why to buy this company? Pay close attention, okay? Now, deep value. Like I said, the price to book value is very mouth-watering levels. It is just at 0.53 times. It is available at 47% discount. Second thing, turnaround momentum. Like I've been discussing from the past 3 consecutive quarters, the company is going at EBITDA of 51.9%. If you watch here, and net profit is 564 to 42 crores. Debt relief. Now they have been relieved from debt from 7.1 times to 3.21 times in just 1 year. World number one positions, largest global distiller of coal tar, irreplaceable scale, and supply chains. Aluminium tailwinds, global aluminum production expand India, raw and critical mineral supplies and all these things. Promoter is buying. Another important thing that you have to look into, that promoter is actually buying. So promoter group actively buying shares in open market insider confidence signals. So in companies buying their promoter is buying their own company shares, that's a very healthy sign. DCF undervalued. So if you do the DCF valuation, it is undervalued. Stock is at 62% discount. Now, another thing, why not to buy? Still high debt. It is at 3.1 times. They have reduced the debt from 7.1 times to 3.21 times, but still the debt is very high. Cyclical commodity business is cyclical. The government keep imposing tariffs. The government keep pushing the restrictions. The profitability, the margin of this companies is very very thin. They have just 0.25% of net margin. Whatever they are earning, they are just earning 0.25%, right? They have a revenue of 16,946 crores, out of which they have just earned 42 crores. So revenue margin is very very thin. Now, China competition, Chinese are very competitive. Global macro, advanced material weak, and no dividend. So these are the things why the company should not buy. If these things bother you so much, then don't buy. But if you look at the positive things, then you can go ahead and look into this company. Now, the valuation analysis, like I have said, what I think about this company. Now, clearly the company is undervalued. You are getting at 47% discount from its price to book value. Bull case, I am expecting 30 to 340 target in next 1 to 2 year. 150 to 180% upside. Base case, it is at 200 to 250. 60 to 65% in the normal case, and the bear case market will be in the range, the rain industries will be in the range of 80 to 100, potential of giving a negative return. But looking at the market, looking at the current valuation of the company, I think you should focus for the bull case. 3 to 340 looks very achievable. 160 to 180% return in 1 to 2 years. So that's about rain industries. Recent news, if I go into, so the promoter is buying, like I have said, Sujala Investment bought 53,300 and shares from open market, holding around 41.35% signal from insider confidence, right? Second quarter 4 and 25 results was very strong. We have discussed in detail. Debt clarity, now debt has fell from 7.12% to 3.21%, very positive. Now in April 2026, graphite pilot rain completed pilot for coated spherical purified graphite of project Mississauga demo plan to go live EV battery material exposure. So in April 2026, this has happened. Now the promoter buying was buying in March 2026. So last month only the promoter has bought. Now in December 2025, Dolly Khanna entry, veteran investor Dolly Khanna disclosed 1.05%, 30.35 close to 36 lakh shares of Rain Industries he has bought, right? Now in 2024-2025 aluminum expansion, they have expanded to aluminiums. In 23-20 massive losses was hit, net losses, and ongoing China competitions. So these are the recent market news and market cyclist catalyst. So these are the things you can take a screenshot and watch it later. Now upside potential, like I have discussed. So in base case to 200 250 range, the market can be upside from 120 21 price to 61 to 107%. Timeline 12 to 18 months, I think the market should do good. Now what will be the reason why I think the base case will be there? EBITDA expansion and debt reductions will be the reason why the stock can surge to 200 and 250. Now in bull case, which is 300 to 340 rupees, the price Rain Industries can go was upside of close to 181% in 18 to 36 months. Commodity cycle and re-rating. So the companies like trade rating companies has given a good rating for this company. So this is why I think the market will be in the bull case for the Rain Industries. Now historic average price to book, it is target price. Now the price book is as a trading point of view, even if you want to do it for short term in equity, short to medium term, the valuation is very good. Target price is 275, right? The book value is only just 225. So PB to normalize, at least 1% will become in price to book value, right? So this is what I think. Take a screenshot and just you can watch it or can read it in detail. So I have discussed many things, strength and weaknesses. You can take a screenshot and you can watch these things. I have done. I have wrote it down everything here, and verdict. So in bear case 80 to 100, base case 20 to 250, and bull case 3 to 340 rupees. Rain Industries can go. So this is the end of the slideshow. So this is the first company that I have discussed. The first company is Rain Industries. Now let's jump into the second company. Now the second company is Pradeep Phosphates. Now, if you want me to go detail about the Pradeep Phosphates, which I will do in the next video, drop a like. I'm expecting 10 likes and 10 comments. If you do 10 likes and 10 comments, then I'll go detail about this Pradeep Phosphates. So the second stock is Pradeep Phosphates. Now, if you want me to go in detail and tell you why I'm buying this, about the financials and everything in detail, then go ahead, 10 likes and 10 videos. Till then, with this stock will be skipped. Now I'll move on to third bank, which is HDFC Bank. Now I know HDFC Bank in the news, right? The current market price is 810, 52-week race 726. You know the reasons why HDFC Bank fell, all these news and everything in detail. But let me tell you one thing. This is one of the best bank in India. No bank can compete with this bank after SBI. Market cap 12.27 lakh crore. Price to book is 17.7 times. That's it. Price to PE ratio is just 17.7 times. And price to book is a historic low of 2.31 times. What else you want? Now we'll go in detail. Now you all know this is the bank, and what are the business model of the bank, right? Now what are the business money coming from HDFC Bank? If you want to do fresh entry in HDFC Bank, you can go ahead and take this. Now retail banking, 57% of their money come from retail banking. Wholesale banking is 43%, and treasury and others is 15%. Take a screenshot and you can read it in your free time. Now, so how business model works? Liability, they take money from deposited, they lend it, fee income, and then rent net margin. So this is the business model of HDFC Bank. Now NII, net interest income. So this is the income that a company earns. 65% of total revenue it comes. NII, interest on loan, interest paid on deposit. Quarter 3 NII was 30%, 30,000 crores, which is growing steadily. Net interest margin 3.275%. NIM under slight pressure post HDFC LTN merger. So you all know HDFC Bank and HDFC Limited has merged. Target NIM 3.5 to 3.7% as CD ratio normalized. Non-interest income fees from fees and commissions 8,840 crores. Quarter 2 financial year 2026, largest fees earner. So HDFC Bank was the largest fees earner in quarter 2 to financial year 2026. Now credit card fees and all these things for forex and derivatives, insurance mutual fund distributions, HDB financial services, all these companies, this is where non-interest income fees are there. So they do mergers and acquisitions and all these things. From there they collect the fees. Subsidiary, take a screenshot and you can read it later. Now for your information, I'll say stock price analysis, right? Now the current market price is 810, 52-week low is 727, 52-week high is 121. Market cap is 12.27 lakh crore. PE is 17.7 times, and price to book is just 2.31%. It's a historic low. Now annual returns, if you look, the company has not delivered any returns, right? In June 2023, HDFC Limited merger, it got merged, right? In financial year, ratio drag, post merger CD ratio 110, NIM compressed, stock underperformed from 2 years. Now October 2025, stock hit all-time high of 120, NIM recovered quarter to strong results and hit all-time high. So the company posted results in October quarter 2 financial year 2026, and the stock hit all-time high. Now April 2026, NIM Concept persists 1 year return 8% negative, trades at 2 to 3.1 times price to book ratio. So we all know why the stock prices fell is because one of this highest executive has resigned over the unethical conditions in HDFC Bank, and they have fired some people in their foreign branch, and they have said that nothing is big, but still I think the bank is very good, and the company will recover very fast. Now if you look at the company financials, the company has been in growing trend. Net interest income has grown from 85 89 to 1000 crores. Net profit has also grown 44 60,000 to 69,000 crores, right? Right. Now if you look at quarterly trend, the quarterly net profit, I know it is flat, but still it is in uptrend. Net interest margin is, however, is falling, where the company has said that it will recover. Now if you look at the GNP and net profit, right, GNPA has also imbalanced. So bank for banks, the biggest thing is GNPA, right? So GNP is very flat. It is maintaining a range of 1.3 to 1.6%. So very good. Next, why to buy this company and why not to buy this company? Now, why to buy blue chip quality? This is one of the bluest chip you can find. If you don't know where to invest, just buy HDFC Bank, buy blue chip companies. NIM recovered, net interest margin will recover ahead. The company, that's what I have said. If you read it, their con call and all these things, you will see the net margin will increase. Earnings is 70 to 18% CAGR, attractive valuation. It is just at 2.31 time of its book value. Post merger upside, right? Our dividend yield, financial inclusion, very good. Why not to buy? Well, NIM has compromised, but later it will be improved. High CD ratio, loan to deposit ratio still at 95%. Limited growth, underperformed from 2 years. Merger digestion, still the merger has not yet digested fully. Unsecured loan stress, the company has unsecured loans like credit cards and all these things. FII ownership, so FII have reduced the stakes, hold 48%. Any global risk of EM sale of customized HDFC Bank selling. FII have sold 48. But if you look at HDFC Bank, promoter have zero equity, all owned by FII and DIA. So premium to PSU Bank, PSU like offer similar returns like SBI. Like I have said, SBI is number one, second is HDFC Bank. So SBI has offered the same valuation. HDFC Bank, SBI has offered the same valuation like HDFC Bank. That is why that is a risk. So in bull case, I think the market can, the HDFC Bank should go 190, base case 990, 975, and bear case 725, and current it is 820. So expecting a high return in HDFC Bank. So you can go ahead and take the positions. Now, why in portfolio? Why HDFC Bank should be on your portfolio? First is India largest private bank, directly impact India's GDP. Second, structure and multi-decade of experiences. The company is since 1995 IPO. Rare entry, it is now at 2.31 times of book price to book value. So it is one of the rarest thing that you can enter at this valuations. Price to book valuation is very affordable. Now NIM recovery, so the company has said the NIM will recover, and because of which the valuation and the stock price will also increase. Now recent news, you can take a screenshot and all this, read the recent news. Now I have given the strong buy for long term investors, right? Bear case, the market will be back to 7 to 750 range. Base case 950 to 1000, and bull case 1100 to 1190. So this will be the bull case. So this is the end of two stocks, and if you want to know the third stock of Pradeep Phosphates, and if you want to go in detail about these things, about you want me to make in detail video of Pradeep Phosphate, then go ahead and like this video. 10 likes and 10 comments, I'll make the video. I hope you would have learned a lot. I'll see you in the next video. Bye bye and take care.